Okay, sounds like we are live. Welcome, everybody, to the third ever installment of the Winnipeg Market Watch podcast. I am here, as always, with Denzel Sullivan, one of the biggest real estate investors, wholesalers, and general Winnipeg real estate guys that we've got in the city. Denzel, how are you today?
I'm feeling pretty good, Keenan. Can't complain. Start of the March, so I'm ready to I'm ready to get going with this podcast, and I'm excited to hear what's happened in Winnipeg over the past month.
Absolutely. And this episode is going to be really exciting, guys. Just for legality purposes, I'll make sure I say it so I'm within the law here. My name is Keenan Brown, and I am a licensed realtor in the province of Manitoba with Judy Lindsay Team Realty. Now that that's out of the way, I am going to walk you guys through all of the data from February 2024. And honestly, this is going to be extra exciting because Denzel has not seen all of this data just yet. So we're going to get his live reaction to some of these very impressive figures that we are going to be discussing here. So without further ado, we're going to talk about the benchmark price changes. As many of you are aware, January saw a nearly 1% rise from the end of December, bringing our benchmark price from about 380,000 to 382,800. February was a lot more dramatic. This month, the February benchmark rose to 398,300, which is very nearly a 5% gain year to date and more than a 4% gain in just 1 month's time. Denzel, any comments on this? Like, to me, I was blown away. I almost fell out of my chair.
Yeah, definitely. I think the um sorry,
It's okay.
a lot of people want my attention this morning. Um, a lot of people I think are going to be very surprised at that. I personally am obviously super excited about that number. Anytime anyone who's flipping real estate sees the market rip up to that extent should be excited. That's definitely unprecedented or uncommon for that high of a increase in the benchmark price. But we'll get into it a little bit later. But this is a good market right now. There is a ton of positive sentiment just with interest rates starting to, I guess the conversation is that it's going to be coming down a little bit. People are just accepting kind of where rates are currently, and people are out there looking for houses to buy. So yeah, I overall feeling I'm really happy about it.
Excellent. That is all true, and I am really glad to hear that you've got a lot of excitement and a lot of energy for this big move that we saw in just 29 short days. So I'm just going to add here one other thing. This is actually the largest single month upward move that we've seen in the last 5 years, excluding December to January 2022. This is the sharpest increase, which really should be saying quite a lot, in my opinion, because in that time frame, the December 2021 to January 2022 period, interest rates were about 1.5%, and now we're currently experiencing rates that are in and around the range of 5% for fixed rate mortgages. So, moving on, I wanted to add one little piece of commentary here. The entire real estate world has their eyes on March the 6th, which, as many of you are aware, is the next Bank of Canada interest rate announcement. This is going to be a big one because we will see if the Bank of Canada will keep their promise by decreasing rates for the first time in a couple years now, or if they're going to hold and kick the can down the road to another meeting, or possibly, and they may take the unlikely measure of increasing rates. Um, Denzel, I don't know about you, but I take the position personally that as far as Winnipeg is concerned, this isn't really as big of a deal as it is in some of the other cities, just because we still have a good flow of first time home buyers. And very clearly, our market has shown that home prices can still continue to increase at a healthy rate, even when rates are as high as they are. Would you say your opinion on that is, divergent from mine, or are you kind of on the same page?
Definitely on the same page. I think that, yeah, Winnipeg in comparison to the rest of the country is pretty affordable. Not pretty, it's actually one of the most, if not uh most affordable. uh, cities in the country. So not surprised at all.
Fair enough. So, taking a look at supply, I'll run through a few of the February numbers. In February, there were a total of 1,449 active listings for detached homes. 886 of them were listed in February, and there were 494 sales. This is actually, in all ways, better than 2023, but only, how do I explain this? This is the only year that is not better than 2021 or 2022 in the last 5 years, meaning we are ahead of 2023 and ahead of 2020 in both supply and number of sales. Um, Additionally, month over month, I will add that the January data had fewer sales, it had more listings overall and lower prices. So, to me, looking at the supply picture, we're seeing everything moving in the direction of seller favored here, with less supply coming to market, even though traditionally more supply comes to market as you get deeper into the year, more sales occurring at higher prices. Denzel, are you looking at this and getting as excited as I am?
Yeah, again, for anyone who is flipping houses, when a market is tight like this, it all it does is just help us be it just helps the outcome of our investments. And I think that, with all things considered, um, it is a positive sign that we're in for a really hot spring market.
Absolutely. And with the overall absorption data also being released, we only took a very brief dip into the buyer's market territory in both December and technically January, although January was really riding the line. But this month, the overall citywide absorption for all property types shot rapidly back towards the seller market range, although it is still technically per the board in balanced market territory. This next statistic here is really something that shocked me. And I personally did not expect this. And I'm very curious to see your reaction here, Denzel. But in February of 2024, nearly 41% of detached homes on MLS sold at or above asking price, which, just for some comparison's sake, that is essentially directly in line with both May and June of 2023, which was arguably, by the statistics, the hottest time in the entire calendar year last year. Uh, I didn't see that coming, to be honest with you guys. I thought we might see this in something like March or April or after one rate cut. But the fact that it happened now is leaving me, well, excited, but also very optimistic and very surprised. Um, would you have seen that coming if somebody asked you to make a bet on the February data, Denzel?
Not a chance. The fact that we're close to the peak of where 2023 prices were in Winnipeg in February only of this year. I mean, you put it together, one can assume that prices are only going to go higher from this point. And so who knows where it's going to land? Maybe it's just smooth sailing and we only get a point increase from right now, but I'm seeing a lot of people out there looking at property. The conversations I'm having with just random people on the street about real estate, it's sounding like, there's just a ton more activity coming.
Absolutely. I think now more than ever, at least since 2021/2022, buyers and sellers are much more aligned on their understanding of value. And we're no longer experiencing situations where sellers are selling and feeling like they've got the short end of the stick, while the very same buyer who purchased the property feels like they got taken advantage of. I'm now returning to a paradigm where I'm seeing sellers and buyers both very happy and excited about the deal, which is not something we saw a lot in early 2023. But this, attitude shift is definitely something that's occurring. And because of it, I will add, at this point in time, I'm not expecting what I'm about to say, but I'm also not ruling out a return to the 2022 all-time high in this year. But I am curious, Denzel, are you expecting a return to the all-time high this year?
Um, I guess we'll have to wait and see. You, March 6th is a very important date to see what happens with the rates. And It's tough to say. I'm not entirely sure, and I got burned back in 22 being a little too optimistic. So I do have to take a bit more of a conservative stance here and say I'm not saying it is going to happen or how I'm feeling about it really, but based on what's happening in February, I'm already, it's tough not to think positive, you know. So, yeah.
Fair enough. I couldn't agree more with that. So I'd like to take a second here and talk about some of the most popular hot areas and as well some areas that have just surprised me with their performance so far this year. Um, there have been two MLS areas where each and every listing that was uploaded in 2024 has actually sold so far this year. And I was personally surprised at both of these areas for a lot of reasons, but mostly because, well, they performed all right last year. This year, for one reason or another, are just kind of going off the charts. And those MLS areas are 2B, which includes St. Boniface and the Norwood part of that area, as well as Area 3E, which is actually East Kildonan. Both areas are at 10 sales for 3E, and in 2B, also 10 sales. Each and every single one of them sold with an average days to sale of between 13 and 15 days. In addition to that, there are several areas that had 85+% absorption, and I'll just walk through some of those in particular. We have Area 1G Charleswood, we have 1J, which is Fort Garry. We've got 2F, which is River Park South, which is, from what I've been told, an incredibly tight area right now. Actually, all of the surrounding areas of 2F, including Southdale and Windsor Park, which are just further north and to the east, are also experiencing extremely high absorption. Um, Other parts surrounding East Kildonan, the adjacent MLS areas, are also going completely nuts. And then anything in the Deer Lodge, St. James, Silver Heights, and Westwood area are also performing excellently as expected. Um, the biggest surprise to me, though, however, was 3P, which is East St. Paul, which is a rural area that I wrote about last year, saying I had actually pretty low expectations for rural property. And Area 3P is at about 83% absorption, which is kind of shocking to me. Um, Denzel, I know I just talked a whole heck of a lot, but are there any areas that you are specifically keeping your eyes on and any areas that you thought would be doing better or are performing better than you expected?
In terms of keeping my eyes on specific areas, I'm still very interested in like the South St. Vital um, neighborhood where we had Pembridge. I'm
Mhm.
watching that area really closely. Um, East Kildonan, you mentioned, I think it was 3E, is that right?
That's the one,
Uh,
100% absorption in 3E.
I just picked up a property off market in that neighborhood, and yeah, like I'm tracking wherever we have active flips and leads right now, and all of those areas have been sought after, and through my time just being in the business, I've seen those areas perform quite well. Now, I kind of wish that this was the case back when I had a couple other properties on the market early in June of last year. But, I think um, the areas where I felt that the places that are experiencing really high absorption rates, like you mentioned, Norwood and Norwood Flats, those areas are typically tight because people stay for a long time, and it doesn't really surprise me with any of that data. No.
Okay, that's good to know. Um, I wanted to add one other thing that really kind of stood out to me is the lack of performance in area 4K and 4J, which were among the top performers for almost the entire calendar year of 2023. That is the Tyndall Park zone of the city, which appears to be struggling a little bit at 50 and 33% absorption respectively. But I'm not willing to rule out those neighborhoods just yet because the listing activity appears to be extremely low in general. It might just be the case that the properties that are on the market are, for one reason or another, overpriced or undesirable. And once the quality product starts coming back out, people will begin to jump again. Um, Kind of transitioning from this, Denzel, You've mentioned that you've got a bunch of leads and active properties that are being worked on right now. Would you care to take a minute and talk to us a little bit about stuff that you're planning on bringing to market this March?
Yeah, so we have two properties that will likely be completed by the end of March, and that is one that we have going on in Charleswood, which has been um, a great experience to this point. We took that one right back to the studs, so we put in brand new insulation, HRV, furnace. It's essentially a new build because all we were left with after the demo was just the shell of the house. So that one should be coming up end of the month here. And then we have our River Heights project, which also has been quite the journey, so to speak. And that will also be ready probably by the end of March as well. Now, with regards to leads, uh, between all of my lead generation things, cold calling real estate agents or door knocking some of these specific properties that I'm targeting, the pipeline is filled right now and the phone's ringing, so things have been really good.
I'm really glad to hear that. And honestly, I am very, very excited to see the finished product on Charleswood Road there, because that house was just it was just too crazy. Like everything about that project was really quite something. So that one is going to be a very exciting one. And given that it is located in a very, very popular MLS area right now, 1G is 16 for 17 on listings to sales this year to date. So I do think that you're in for a great outcome there. I guess let's take a look back at February, Denzel. I know that you and I were involved in multiple transactions together and that you had a lot of wins both on and off of the MLS. What do you think was your biggest win in February? And what kind of momentum do you feel like you have going into March?
Well, February, I think, might have been a record month for me in terms of just the amount of deals done. I think I was looking at my chart here at home and I did 9 deals last month. So
Wow.
between assignments and sales for the flips, it totaled out to nine. And for me personally, that is probably the most that I've ever done in a month. So that's pretty exciting. And in addition to that, I also was able to sell one of the flips that we've had for a long time, thanks to um, our amazing agents over at Judy Lindsay. And you know, yeah. So as far as wins, the biggest win is obviously the deal flow right now. It's great, and then getting that one flip off the books, I think, was a huge weight off my shoulders, and I'm really thankful that you guys helped me out with that. And yeah, we're still working away though.
Absolutely. I was really glad to see that property in particular that you were just mentioning there get moved, and we did do everything we possibly could to ease buyer concerns, solve problems, and make it so the end purchasers were completely satisfied with the product. And I think that the outcome there turned out to be pretty good, and it's always nice to get stuff like that off the books.
Oh, and one
Oh,
more
go
thing
ahead.
to add, Keenan. I also forgot to add another huge win was the fact that where we did close on a property, I think it was in November or October of last year, and that property actually wasn't supposed to be a flip that I was taking on. It was supposed to be a build play, and we ended up renovating it and selling it one day on market. So that was also a huge win for me where we turned nothing into something, um, or something where I wasn't quite sure what the exact outcome was going to be, and it actually turned out or exceeded my expectations. So that was another big win.
And I am really glad that that happened, because I know you kind of ended up flipping it almost by accident. It was a circumstantial flip as opposed to an intentional one. And I think that Denzel and I and our multiple conversations and market research I'd say we had a few hours worth of discussion on what exactly was to be done there. But our marketing plan for that property, I would say, was flawless. Like the whole strategy was executed in such a way that it was very low risk, in my opinion, and it ended up paying off a lot bigger than I expected. That's for sure. And
Yeah.
hopefully, you and the partners that you had on that project are very satisfied with with the nice profit that you're able to turn relatively quickly for a property that wasn't even going to be on the table for that kind of work originally anyway.
Exactly. Yeah, totally.
So, Denzel, is there anything else you'd like to add about what's happened in February or what your goals and hopes are for March before we introduce our very special guest?
Yeah, I think I'd just like to share my goals and just reiterate some of the things that we both agreed that we would try to pursue this year. And that's just still keeping up with a deal a week. Generating some kind of business weekly, I think is a good goal for the both of us. And we're going to continue to do that. I actually just got a notification for some of the uh, stuff that I've been targeting, the specific pre-foreclosure stuff that I've been targeting. I'm going to continue on with that strategy. The Flyers, we got a flyer team on the ground right now in dropping off some letters to generate some stuff in the private market. And, I'm really excited for March. I think we're just at the cusp of what could be potentially I won't say record breaking, but just a great spring market. And I'm looking forward to it.
Absolutely. And I would like to add for the record that I am also on pace for a deal a week, but I think Denzel might be a little bit ahead of me, but we're cooperating, not competing. So that is that is very good for the both of us. And I am like-minded to him that I think that doing something once a week to try to generate business is a great strategy. And understanding that in the spring season, it might be the case that you do 2 or 3 in a week. But in the slower times, you might work really hard one week and it won't pay off till much later is an important part of the business as well. I am going to transition the episode here. As many of you have heard from previous episodes, it was our intention to always have a special guest with us on the podcast. And we want to pull industry experts, other realtors, investors, people that just work every day and enjoy the industry, and have them come on the podcast to tell a little bit about their story. And our first ever guest is going to be, I think, an amazing treat for you guys. Guy Boudreau is a 40-year real estate practitioner, investor, and former owner of a real estate brokerage. He has probably forgotten more than most realtors know. He owns a significant rental portfolio and has executed virtually every real estate investing strategy that you could possibly imagine at one point or another. He has successfully navigated multiple major recessions and has actively been one of the top producing realtors in the city throughout the boom periods, the bust periods, and everything in between. Guy has a wealth of knowledge that we are allowed to tap into here today, and it is going to be an absolute treat for me to interview him here on the podcast. Guy, welcome to the show. How are you?
Wow. Well, I'm my head, I got to put it back on here, but yeah, no, I'm great. Thanks for inviting me, Denzel. Good morning. I'm happy to be here.
Good
That's
morning.
absolutely excellent. Um, Okay, Guy, we've got a bunch of questions set out here that we're going to ask you. And Denzel and I might ask for elaboration on some of your answers, but I think that everybody's going to be really excited to hear what you have to say. So,
Sure. Yep.
for those of you who don't know you yet, can you give us the short version of when and why exactly you got started in the real estate industry?
Sure. In 1983, I was involved in, I had my first business venture. I was selling hot dogs in Lockport. And it was just after that incredibly terrible period with interest rates as high as they've ever been. And I was working out of a foreclosed on property in Lockport, running a business. And the economy started to change. And so an offer was made on the building. And I tried to put my finances and so forth together. I was a very young person at that time. And in the end, another party won out and took over the real estate, and I had to move on. And it upset me. And it was, I think, part of the reason I wasn't successful was my lack of knowledge of real estate. So I basically decided I was going to take a real estate course to, get myself tuned in better. I did that. And by the spring of 1984, I had completed all my coursework and I was ready for licensing. I really didn't have any intention of going into real estate, but right at the time, I was working for Festival de Voyageurs, and they shut down all their operations, me included, for the summer and or for the after the project was over. And so I had my opportunity to go into real estate. I had no intention, but I wasn't employed. So I thought, what the heck? And so in 1984, Bill Burns at NRS Block Brothers hired me into real estate, and that's where it began.
Wow, that's interesting, and I don't think a lot of people would have expected that. Um, I guess the next thing that I'm going to ask you is just a little bit about the general real estate situation in the 1980s, because to Denzel and I, in our generation, we're familiar with the MLS being accessible online. We're familiar with DocuSign. We're familiar with CentriKey and electronic lock boxes and email. Do you want to tell us a little bit about the world of Winnipeg real estate in the mid 80s? Like, how did people find listings? How did people get keys for showings and deliver offers without emails? And how did agents talk? And how did investors talk without cell phones?
Yeah, it was, I mean, you look back on it and you think, how could you survive? But at the time, technology was, it was where it was. Initially, when I first started in real estate, we used to get couriered lists with pictures and perforated lines across these pages that you would rip and break out into cards that represented the new listings for the day, and they were couriered from the real estate board to all the different agencies, and I every morning I would spend that morning, ripping those things up and putting in the new listings, and then deleting the ones that were notified as sold, so I wasn't, talking to clients about something that's already sold. It was like unbelievable what we had to go through at the time. Technology, cell phones were starting. They were the size of a suitcase. Into the mid 80s, it was. They were then the size of a brick, or into mid to late 80s they were the size of a brick. So the technology was starting, faxing was starting at that time. So things were starting to evolve, and then Homer, which was our first computerized system, came into play not long after I started. And that then you'd get a printout, and the thing was like those machines in that give you teletype reports that are banging away on a typewriter, and then you'd get all your listings coming out that way instead of having to ship them via courier. But it was an evolution, and but I'll tell you what, at that time I had always had a pocket full of dimes, and I knew where every payphone was in the city pretty much, because then you'd get a pager, which is how we communicated. You get a message on a pager, only so many lines on the pager, and then you'd have to read the pager, and someone's calling you, and you'd find a phone booth somewhere and drop in a dime and make the call and make the connection. So yeah, totally different then than it is now.
You don't say. That's
That
yeah. Go
that
ahead,
is
Denzel.
Hello, sorry.
No, I
no.
just said go ahead, Denzel.
I'm sitting here with a huge smile on my face because I just find that so interesting. That's super cool. I think one thing I want to ask you, Guy.
Yeah,
s- So what was your system in terms of just tracking leads at that time? Because I'm having a hard time right now just with the amount of business that I'm trying to generate for myself, just between the MLS, the private market, and foreclosures and stuff like that. Just managing everything is challenging. So like
sure.
what would maybe, you'd get into the office, like how much time would you really spend on, because you would have to kind of get rid of some of the stuff and follow up with agents, I suppose, on listings that were sold, or right?
Right. Um, Well, you touched on something earlier, and you talked about door knocking. And my colleague that I've basically gone through my entire career with, Ryan, um, when we first started, we were young guys, right? And we had no real, other than your family and some friends, you had no real connection to people to open the door for you, give you business. So you had to go out and find it. And you talked about door knocking. And I had tremendous success with that. I would go out and Ryan and I would pick a street, Wolseley. I remember the first street, the first time I walked down, it was Clifton, and I'm walking down Clifton, knocking on every door, and brand new in the business. And the guy opened the door. Hi, I'm Guy. I'm new to the business, but I'm really energetic and I'm looking for listings. Are you thinking of selling in the near future? And he looked at me and he said, Yeah, I am. And I didn't know what to say after that, right? And so we went on, and I sold his house and found him another house, and Ryan and I commenced to door knock, and it was a funny thing. You talk about management, Denzel. I would door knock and get listings, and then that would generate advertising that would generate leads for buyers, and we would get really busy. And then you'd stop door knocking because you were busy doing the things that that you needed to get new business, and then you'd sell through all of that and then realize you're out of business, and then you have a lag, and then you'd have to get door knocking again. Or I had tremendous amount of success with, at that time, private sales. I would get on the phone and ask a question that that the only answer was yes to. It was one of those capture questions, and if I was able to get you the price that you wanted and earn a fee and put all the money you needed in your pocket, would you consider that offer? And typically the answer would be yes, unless they just didn't want to talk to you, right? But normally people that are sensible would just say, of course, I would do that. Great. So can I come down Tuesday or Thursday? And then away you go, right? And so all these different strategies, because we didn't know anybody. We didn't have, any network. And as my career evolved, then of course, then people then begin to support you. But anyway, if I got off track, that's you mentioned about door knocking, and that kind of inspired me to think about when I first started and how things started to roll.
Yeah, that's really cool. Sorry, Keenan, you can go ahead there. I just found that really interesting.
No, no worries. I think that was a wonderful interjection there. And honestly, Guy, like that whole world, I couldn't even imagine
Yeah.
trying to do this job with that kind of technology and that kind of circumstance. So good on you for powering through that. I guess everyone had to at that time, but
Yeah.
just if I were dropped back then, I would not I'd be like a fish out of water. Let's put it that way. It wouldn't be very natural to me at all.
I don't think so. I think you looking back on it, knowing what you have available to you is you'd look back and think, how is it possible? But if you were given that circumstance and an equal footing, I think the two of you would have rose to the top.
Oh, well, fair enough. I appreciate that very much. Um, One question that I know Denzel and I both had for you, especially given what's been going on this past few years with interest rates, are regarding, the rates and being a realtor in the 80s and 90s. Like rates were really high for a huge portion of your career, especially in the beginning. Can you tell us a little bit about what it was like to trade in real estate when interest rates were in the double digits and sometimes even higher?
Right. Well, it was again, we didn't know any better. When I left the hot dog business and went into real estate, interest rates were significantly high. And but as I entered in '84, they were starting to go down, and the trajectory was, at the time, I think they were around 12% when I first started, and which is an interesting thing, because at that time, we would advertise a listing that had a mortgage on it that was assumable, and the interest rate was quite high. And so, in order to move on from that, we would advertise to the general public, a significant 5% reduction for the first year on the interest rate. In other words, the owner would pay that down, and then we would advertise it in hopes of getting someone interested that would see that as attractive. And it worked. Among many, many strategies that we would bring. But I think what happens is, regardless of what the rates are, people still need a place to live. People are getting married, they're having children, they're being divorced, there's estate sales, there's all these things going on in real estate every year, and there's always product, and there's always someone that's willing to do it, whether they have more cash that allows them to not have to deal with banking so much. Whatever the case, I found that, especially in Winnipeg, um, it doesn't matter really so much about, we are just such a stable market, and I found that even in downtimes, yes, things slow, but there's still always enough business if you're smart, hardworking, dedicated, treat people with respect, fairness, and honesty. You're gonna make just fine in Winnipeg. It's I've done all these 40 years in central Canada, and we're kind of disconnected from the insanities of Vancouver and Calgary and Toronto, where if something happens in the market, the world is over. But in central Canada, in Winnipeg, the world would be over for 2 weeks because we're reading the paper about what's going on in Toronto. And then all of a sudden we're looking around and thinking, well, the world isn't over. People are still buying property. People are still, life is okay. We just sort of slow and steady wins the race in Winnipeg. It's a beautiful community to be a part of that would support us through thick and thin, through, bad times, good times. It's always been a place where things recover quickly, and that it just keeps moving forward. So,
Wow. Okay. So knowing that historical bit about Winnipeg that we always just seem to move forward, which is something that I know you've told me before, and I know something that I've observed through the data in the past, would you have said that that is pretty much how things went at, in the aftermath of 1987 and in some of the weaker parts of the 90s and after the tech bubble and even after the Great Recession as well?
yeah, all through those times, clearly it was hard to make a living, but I made a living, right? I mean, there was always business to be had. There were other parts of the country that were hit dramatically more than what we experienced, because for the longest time, and I mean most of my career, homes in Winnipeg were that. They were homes. People needed them to live in, and they moved on from, and, or downsized from, or got into for the first time. Whereas in places like Vancouver and Toronto, they're not so much homes as they are commodities.
Of course.
And they're speculative. People, companies, are buying en masse these products. And so when there is a downturn, then there's a wholesale movement with these investors panicking. And I think, Denzel, you and I have talked about this. Just relax, it'll work out. Where, and they sell off, and they start selling off, and then their market really seriously tanks. And then it's like, it's really hard. But it doesn't happen in Winnipeg because our housing stock is treated differently. And it's always been sort of our saving is to have that kind of market. Anyway, that's got a little off topic there.
Well, it's okay. I appreciate you, providing the extra color. But as we're on the topic of investing in real estate right now,
Yeah.
I understand that you have a pretty significant real estate portfolio of your own. When did you start investing in real estate? What made you decide to try it, especially considering in a lot of the years that you would have been purchasing your first few investment properties, investing in real estate was not nearly as popular or well documented as it is currently?
Right. First of all, it's in Winnipeg, it's always been the scale of these things. For a number of years in my early career, I mean, you could buy a beautiful 1,100 square foot bungalow with a garage in Crestview or Charleswood for 79.9, right? So the scale of these things, the amount of money that you had to have on hand, it was different than it is today. Um, but I remember one of the first transactions I had. A couple of brothers, they're very successful in business today, and I won't get into names, but at the time we all met and were friends. And I'll say Ryan, he said to me, he was interviewing me to help him to find a home, and he had some money, and it was one of those breakthrough moments for me to get into a price range I'd never seen before. And he looked at me and he said, "Why should I be trusting you? Like, you don't even own real estate." Because at the time when I started, I was renting, right? I didn't
Of
have
course,
a
yeah.
house, I didn't have anything, right? Just started in business. And I looked at him, I said, "I don't have now, but I'm working on it." And he trusted me, and I sold him a house in Linden Woods, which was an area that I'd never sold in. And then, very shortly thereafter, I took that to heart, and it was always something that, I thought to myself, you know what? If I don't have real estate, if I'm not invested in real estate, if I can't see and have the value it brings to my life, how can I communicate that to others? And so that sort of set me down a path, and so I bought a house, my first house on Telfer in Wolseley, and then one popped up a year later down the street, just a disaster, a wreck of a house, and it was, next to nothing. And I zoomed in there and I bought it, and then Greenwood Place, and then Arlington, and I just it just went from there. I felt that it was something I had to have in order to speak to clients about that I couldn't convince them to invest if I didn't have my own investments as well.
Wow. Okay. So that's a very valid thing to have said. And I definitely remember as a rookie agent kind of feeling like, how am I supposed to explain this process to somebody when I don't even own a home for myself to occupy? So
Yeah.
the parallel there to me is really interesting. And I mean, it does make a lot of sense that if you're, pitching something to somebody as an investment, you need to understand it in a way that is a little more intimate than I just read about it in a book. So I totally, totally get it. And I'm glad that that's kind of the path it took you down. Now, it sounded like,
There, I just want to add something
yeah,
to,
yeah, go ahead. Hmm.
in my world, I'm not a real estate agent. I'm a real estate developer, and so when I first started a few years ago, I could definitely relate in terms of just trying to raise capital even without having done any business. I guess the same thing when you're talking to a client guy back
Yep.
in, I guess it would be the late 80s or whatever, when you were just starting out, trying to talk someone into, well, I shouldn't say talk someone in, but to try to educate someone on something that you don't exactly own is or have done is challenging. So yeah, I just want to comment there to say that I definitely feel that for sure.
It's true. I mean, if someone's asking you a question and they're looking to have an informed and a wise response, you only get that through experience. And so if you don't have any experience in owning or going through the mortgage process, or repairs or anything, it's pretty hard to be able to talk about something if you don't really know. So yeah, agreed.
100%.
So, Guy,
Yeah.
you spoke a little bit about finding these houses coming up on the market when you bought them
Yeah.
in the 80s and 90s. So, in the current investor community, the off-market situation that we've got in our city is, in my opinion, flourishing. And as far as I understand, it may be as big as it's ever been. But I wanted to know, from your memory, were properties traded off market at the same frequency for most of your career, or was it at any point in the past more common than it is today?
No, I think it's probably evolving into being more common now than it's ever been. And I think a lot of that has to do with, well, in part, technology. And it's people's ability to now, from their phone, be able to know most everything. And someone can put something out on Facebook Marketplace. And I mean, there's tools available that people feel they can use to try and go out and maybe do things on their own.
Mhm.
And folks like Denzel would maybe identify that as an opportunity, and respond very quickly and go in, and and these people are potentially having some difficulty for whatever reason, and then Denzel would find the solution. Whereas in the past, they were like painted into a corner. There was like there were no independent contractor type businesses like Remax, for example, where you basically pay a desk fee and then you get the rest. The companies in the early stages, they controlled everything. They controlled our splits. We were, yeah, it was a totally different environment. But anyway, from there, it's evolved where I think now people in the public have so much more tools available to go out and do these things, where in the past they didn't. So I believe that it's progressively, as like Comfrey, for example, started, then people had a resource available to them to, to try and market their properties on their own. And that opened the door for people to go direct, like Denzel, and be able to hammer out a deal. There wasn't a lot of that when I first started. Um, but what I would say is this, that in all of the time I've spent in real estate, being an intermediary, being in between someone saying something someone doesn't like and the person that's receiving that and how to emotionally respond to that, being that intermediary is a very important element in moving contracts forward and will always be an important part of moving contracts forward. Many times, I'm sure, and you've experienced this, you guys, where someone goes in and they deal directly with the owner and they say one wrong thing, and then there's a conflict, and that's it. The deal's over. There's no trust. But if you have an intermediary between the two, then usually the deals get done, unless they're so far apart that it's just not going to work. But having the role that we play is an important one, and just but having again gone off topic a little bit, but I think that now in our market there's so much more ability for individuals to act on their own behalf that it's opened the door for investors to be able to connect directly as well.
That's kind of exactly what I thought you would say, but I'm really glad that that is your answer, because I think there's a lot of beauty in the fact that the intermediary aspect of this industry is what really keeps driving things forward. And I have always believed that in the absence of somebody standing between a buyer and a seller, whether it's for real estate or anything else, that eventually emotions would take over and less deals would happen.
Absolutely. It's the nature of these things because if you're standing on one side as an investor, you want to get the best deal you can. And if you're standing in the other side and you're the owner, you want to get as much as you can. And so the discussions that take place without an intermediary can get upsetting and hot real quick, and can and will and on in most occasions will blow up. So having an intermediary to calm everyone down is definitely a value.
Good points. Any comments on that, Denzel?
No, I think that yeah, no comments here.
Okay, just making sure you got a chance to talk. Um, Guy, Denzel and I are very glad that we have the luxury to talk to you, to ask you all of these questions about how things were in previous decades and see your experience from those years and how it has shaped your understanding of the world and the markets today. But we're curious, did you have somebody who was trading real estate in the 1950s, 60s, or 70s that you had access to ask the same kind of questions we're asking you? And if so, was there anything that really stuck with you that that individual might have said or advised you on?
Um, it was a totally different world, and we were all independent contractors under a brokerage that controlled us. So we were all kind of you know everyone was out for their own self, and each agent in the firm kind of kept everything close to their vest, because if you let something out, someone may get wind and then they get it instead of you, right? So it
Mm-hmm.
was a different environment. There's so much information available today, but there were a few. I won't get into last names, but Cecil, Pearl, Ernie, Les. These are people that came from that period you were asking of, that were really professional. And I, rather than sit me down and tell me what to do and how to do it, rather I had to observe characters, how people managed their time, how people were treated in their business. And I sort of gravitated to those that had character and that treated people with fairness. And I think one of the main things that I drew out of that whole period, and it really has helped me for many years in all the other areas of my life, if you have a situation you're involved in, you have to take the money out of it. You can't go into a discussion with a seed in the back of your mind that you're looking, that there's money involved for your benefit here. Right or wrong, dumb or not, I've always entered into these types of things and said, take the money out of it and then just do what's right. And it doesn't matter. And if it costs you money, then it costs you money, but you do what's right. And if you do that, then you will have great outcomes and you'll have longevity. And that was something that I drew out of those four names was just the integrity and the care for people's circumstance and that we were there to help them. And yes, we earned a fee, but that wasn't everything. It was more how they came out of that experience and were they going to tell their friends in a positive way about it, or and were they treated with respect and fairness instead of all of a sudden something happens in the deal and then they're influenced one way and it cost them and benefited the agent. So I always, that's what I drew out of, I guess, osmosis from all those closed individuals, but still observing how they did their business.
It's really incredible because when I think about what being a realtor must have been like back then, it's a hard world for me to even imagine, despite your, trying to explain to me how things generally ran. But it sounds to me like a lot of the lessons that you took from the people that had been involved in the industry before you are really the material ones are still applicable today for both agents and for people like Denzel. And I do think that that is very powerful. And I know that you tried hard to instill in me some of those same lessons very early on in my career. And I completely agree. And it never occurred to me that that is something that you took from the people that would have been involved in kind of guiding, mentoring, or at least, giving you something to shadow when you
Mm-hmm.
had started as a realtor.
Mm-hmm.
So I'm going to transition this discussion again just a little bit, but I've had a ton of people want to know this. This is probably the most frequently asked question from people who tuned in and said, "Do you have any special questions for Guy?" It was, how was it being a realtor between the period of 2002 and 2007 during the real estate boom? And what was it like to deal with the 2008 financial crisis and its fallout?
Right. Well, it in 2002, I had been running since 1984 as a successful realtor. We, got into the Remax franchise world, and we had some really good runs. And then we divested, got out of those franchises, and I was running with a young family. It was a whole different world for me, young children at home and the time necessary to be with them. So in 2002, I started with the Judy Lindsay team in a very specific role, and that was as the listing agent role. I didn't handle buyers anymore. There were other team members. And so that afforded me the ability to be with my family more and be in a much more organized state. But having said that, in '02, things just started to go, we'd put a house up for sale and it would sell immediately. And then I'd get feedback from agents like, come on, like I couldn't get there or whatever reason, right? And it's not, didn't bother me at first. It was like, hey, I put it up for sale. One agent got paid, I got paid, the owner is happy, it's sold, move on, right? But it just became obvious that there had to be a different way to do this because of the fact there was so much interest and so few, opportunities or houses. So we put our minds together and we started to stage these things to the market in 2002, 2003. So then they would be showing start offer day, which is a very common thing today, but it wasn't happening in those early stages in '02 to '08. So we started doing this and it was very novel. And and what started happening was that the agents all got a chance to get in, and someone didn't just get in and knock the knees out from everybody else. Everyone had their fair swing at it. And then the owners would then sit down with, let's say, two or three offers. And typically in a blind auction, which is the way, it's not an auction, it's not a proper word, but one buyer does not know the content of an offer of another buyer's offer. They're kept separate, so buyers don't know what the other parties are doing. So they have to put their best foot forward, which means you're no longer dealing with an objective attempt to try and close a sale. It becomes subjective. What's it worth to me? And so there can be wide range of price that comes out of that. If the person that's bidding one of three on a house and mom lives down the street, that house is worth a heck of a lot more to them than it's worth to someone that really doesn't care about that. So what happened is it started to go nuts, and that run was spectacular. And we would just put stuff up for sale. Listings were king. That was the role that I played. There was no private sale industry to speak of. Everyone was flowing through real estate. It was phenomenal. And we were having spectacular outcomes. But the byproduct of that was that the market valuations really accelerated, because if someone was prepared to pay that well beyond the subjective values became the measure by which appraisals were done in historic terms. So that became a real accelerator in the valuation of property in Winnipeg, and that's when prices really started to go, and it hasn't stopped since then. '08 was different, and I'll say this, and this will go back to a discussion we had a bit earlier about going into times when it's tough. I remember '08, and it was just like, oh my gosh, like what are we going to do? The world's over, right?
Mhm.
And it was the
Yeah.
same thing. Toronto, Vancouver, actually the entire United States. I mean, the whole North American economy was looking like it was just going to collapse around us. And here we are in Winnipeg, and it's just like, okay, well, I guess I have to find another career, right? And but I just distinctly remember it sort of flatlining. We never lost anything. Other markets like Florida real estate, Texas real estate, I mean, that's when all the Canadians, the money was at par. They were going down and buying these things for 20 cents on the dollar because their markets absolutely collapsed. That didn't happen in the middle of central Canada, central North America. Here us, our little town of Winnipeg, nothing really changed. We flatlined for values for a few months. And then I remember it just becoming, yes, there were difficulties within the economy, but as I said earlier, our homes were homes, not, they weren't commodities. And people began to then just move forward with their home needs. And we just got back into business. And within not long a period, because there was a shrinking of inventory, supply and demand, you have less opportunities to buy then, and there's still people that want to buy, but less people wanting to sell. Then there's an imbalance, and then very quickly we got back into multiple offers and for good product. I mean, the tougher areas, it became tough, and there were lots of inventory, but for neighborhoods, like good neighborhoods, we just sort of bounced through '08, and we carried on. Winnipeg's an amazingly resilient place to live. It's close to lakes, it's clean air, we're a diversified economy, and we seem to be, for the most part, insulated from all these catastrophic events that occur around us.
That's remarkable to think about, actually, because the pop culture understanding of that era is that it was really just desolation throughout the entire real estate industry. But I know, based on the data and based on what you're saying, that it does seem like the recovery that we experienced in Winnipeg was indeed really quick. That this Great Recession might have only lasted 4 to 6 months in our city, for all of what it's worth. But Denzel, before we move on from that, did you have any comments or questions about that time frame and how it was at all?
Yeah, I think more so just like a comment when things were looking ugly back in 2022 in the summer, and we were dealing with a lot of listings that I had coming up or ongoing at that time. I remember feeling, first of all, pretty overwhelmed about the entire thing, just being upfront about that. And, you know, Guy, after talking to you about sort of what that season was like in your time in real estate back in 2008, and then comparing it to what we were going through right now was really reassuring, knowing that, you know, Winnipeg is insulated from the rest of the country in regards to just what typically happens, you know, I guess nationwide. And Keenan, I remember you sending me a chart actually of sort of what happened after, you know, 2008 recession happened, and, you know, getting back to the all-time highs after a really short period. I think it was only 18 months actually, or something like that. Is that right? It was like,
I think it was less. I
it
don't
was
even think it was a
less.
full year. I think we actually hit another all-time high in 2009 on the benchmark.
Yeah, and so, you know, seeing data like that gave me hope that this is just part of the cycle, and that, you know, real estate isn't going to zero. It's just part of the investing business. And so here we are today in an environment where we're almost reaching the peak of where the prices were back in May of 2023. And it's exciting. You know, I started at a time when real estate was booming. I started in 2020, and things just got crazy. And even for you, Guy, you mentioned just in conversations that we've had that you've never seen anything like that. You've never seen, at least with Winnipeg.
Right.
And you know, now I've kind of gotten a taste of what it's like to try to do business in a down market. And now here we are in the up and up, and it's just it's fascinating just to be a part of it and see it. And obviously to have some skin in the game too. So
I
yeah,
remember
all cool stuff.
those. I remember that story, Denzel.
Oh,
But I remember that period. I mean, Keenan is looking at me like, okay, I got to find another job. And oh my God, the world is ending. And I had to talk him off of a number of cliffs during that period. And it was always, and same with you, Denzel, with, oh my
yeah,
gosh, you know, sell everything. And you guys, just relax. This is Winnipeg. It's not Toronto. Stop reading the papers. It's Winnipeg.
yeah,
And it's going to be okay. Things are going to turn around really quick, and you're going to see. And yeah, it just,
yeah.
it happened.
Yeah, all real estate's local, right? So
Excuse me.
That's
Yeah.
true.
Mhm.
And you know, it's funny to think about those times because I was pretty afraid. Like when I saw prices turning, I thought, "Holy smokes! Like it's all over. The party's over." And it wasn't.
Yep. No, it wasn't.
So that's that you know that's really funny to think about. But this is a great transition into my next question for you, Guy.
Yep.
Taking your entire career and lifetime of understanding of the industry into context, in broad terms, where do you generally see the Winnipeg real estate market going? What do you think of it right now? And distant future, what are your sort of expectations for the city?
Right. Um, well, there's a number of cities that are in the same kind of insulated area of valuations as we are. There's Edmonton, Saskatoon, Regina, and Winnipeg. And the cost of a home in these markets is is substantially less than other centers like Calgary, Vancouver, major centers out east, Toronto, Montreal, and Halifax, places that are a lot different than us. And I think that what we're going to see is we're going to accelerate to their not their benchmarks, but we are going to, improve on a percentage basis higher than those other markets. And the reason I say that is that we've got a huge inventory of new Canadians, all the disruption in Europe and people coming to our country by the hundreds of thousands, and immigration has become a big thing, and it's affecting the rental market, and it's affecting housing stock, it's affecting everything. And one of the things, I think a significant part of that is the unfortunate circumstances going on in the Ukraine, and the number of Ukrainian people coming to Winnipeg, especially, where they're finding Winnipeg, in the last major influx of immigration from Europe, it was Ukrainians into Winnipeg. There's a huge infrastructure to support the Ukrainian culture here. I mean, in the North End, pierogies or, kubasa, you name it. I mean, there's a lot of where we came from was influenced by Ukrainian people, and so there's and our climates are very not. I mean, we get really cold, but I mean they're they see the sorts of things we see, so they're not afraid of that. Whereas in Toronto and Vancouver, the weather and those from the Asian markets are more disposed to that type of climate. So I think with all of the immigration that's going on and the fact that our prices are still relatively low in other parts of the country, people are going to start to migrate from the major centers when they first land and start coming here. And that's going to drive our market. And I suspect that over the next 5 years, Winnipeg is going to be hang on to your real estate. It's going up. That's my thought. And there, all the dynamics, the fundamentals are there. It's prices are low, inventory is low, by comparison to other parts of the city, and there's going to be lots of demand. There's a lot of people that are going to want to get into our market, and if you apply supply and demand dynamics to our market, it's just going to drive pricing.
I think that's going to be a great clip from this episode is you saying, hang on to your real estate. It's going up. That's that's really quite something.
No, I
So
mean, you guys would rather everyone sell to you, but I get it. From an overall perspective of value of homes, living in homes in our market, things are going to get better. They're going to get better. Winnipeg is that kind of market. People need a place to live still. There's all these families coming here. They need a place to live, and there's going to be demand, and that's going to drive pricing.
Yeah.
okay, well, that's really kind of the same opinion that I had on the matter, and I'm glad that you see things that way too, Guy, because obviously you've been around for a lot longer than almost anyone who's involved in the market, and I take your opinion on where things are going very, very seriously, and I know Denzel does too. So one of our last questions here before we end this episode is, in your opinion, what would you say is your greatest moment or proudest achievement or crown jewel of your real estate career so far?
Well, up till this point, I've had lots of relationships in business ownership and partnerships and, you know, with regards to business. But over the last 5 years, I think when I look back on my career, probably the proudest I am is of being valued and being allowed to participate in the work that you and Denzel are doing, and the mentorship that, I mean, you guys do all the work, and every once in a while, I just sort of, say a few things, but, you know, when I say a few things, usually so far, the outcomes have been pretty good. And so my being able to be a part of that and to influence you and guide you in ways to conduct yourself in the manner in which you need to, the honorable way of doing business, and then the success of it. That I think I look back now and all the things I've done is mentoring you, Keenan, especially, and Denzel in the relationships that you have. I'm proud of that, and I value it.
Well, that's very. I'm surprised that that was your answer, and I'm a little taken aback here by it. But it's been an honor to be able to be a part of it to me too. And I'm not going to speak for Denzel. I'm sure he's going to have something to comment on it. But we both have really thoroughly enjoyed doing all the business that we've done together as the three of us. And even before Denzel kind of came into our lives, Guy, I know that the most fun that I had in real estate is when I would be involved in transactions or assisting you in transactions myself.
Right.
Yeah. Absolutely. I just want to say too, and for other people listening out there, having someone who's been in the business as long as Guy has is huge, both with helping you make decisions in your business, or whether it's just day-to-day stuff. How can I position this thing better, or how do we negotiate this and that? It's a great resource to have, and having you guys as a mentor and helping us with our with business is just, it's been incredible. So, thank you for everything.
It's been a pleasure for both of you.
Awesome. Well, Guy, is there anything you'd like to leave us off with as we come to the end of this episode? Any final thoughts or closing comments?
Yes, and this is something that pops in my head so often. Um, uh, and it's an interesting thought, and it has to do with how steady our market's been. In all the years I've been investing, I've divested on many occasions, to just move on and mix the portfolio. But in most properties that I look at, and then I look at it 2 or 3 or 4 or 5 years down the line, even though our market in Winnipeg has been stable, I look at it and I know I bought that particular property at that time. And I think to myself, damn, I should have bought 3 at that time.
So you're feeling like if you could go back, one of the some advice you'd give yourself was to have been buy more and hold more.
Yeah, you think at the time you're doing the deal, oh my gosh, this is, risky or whatever, and it's too pricey or whatever. And then as, 2, 3, 4 years down the line, you think back on it and think, damn, I shouldn't have thought that way. I should have just bought two or three more on the, of the same value range. Because now look what they're doing, right? So, and that's happened through my entire career. I look back on it and think, damn, should have bought two or three more.
Yeah,
I think that's good advice for anybody out there. Yeah, investors, if you're listening, this is the ticket. You heard it from Guy himself. Just buy more, hold more.
There you go.
Okay, well, Denzel, unless you've got anything else to ask Guy or anything to add, I think this has been absolutely great.
Yeah, no, nothing for me here. It's been great.
Well, super.
Good. Well, gentlemen, it's been a pleasure. Little disconcerting on my end. I'm not a public kind of person to talk like this, but I felt assured by our relationships that I would be treated fairly, and I think I have been, and I appreciate it.
Oh, absolutely, Guy. Thanks for coming on the show.
Sure. Anyway, take care, gentlemen, and
Right.
we will talk again soon.
Absolutely.
Thanks,
See you
Guy.
next time, everyone.